The markets continue to sell off, and it has been a bloodbath the past couple of days. And the question is, are we going to continue selling off, or will we finally see a rebound? That's what I'm going to talk about in this video. I'll give you my opinions on what I feel is going to happen. So let's jump right into it. So if you're not already aware, one of the main reasons why we're seeing this sell-off is due to Trump's tariffs. He previously postponed these tariffs, and we got confirmation today that he is indeed moving forward with these tariffs. And then we saw some retaliations from other countries pretty much saying that, hey, if you're going to put a tariff on us, then we're going to increase our tariffs on you as well. And obviously this is terrible for the markets because who pays the price for this? The consumer, all right? Obviously, if it costs more to get goods from, let's say, China, who's going to pay for that extra cost, right? The company's not going to take it in the margin. It's going to be the consumer. And obviously, this is not good news. However, in the long term, this should actually pay off and be beneficial. But in the short term, it is definitely contributing to this sell-off. On top of that, we are also seeing GDP numbers decline pretty aggressively. Now, keep in mind, these numbers can fluctuate pretty quickly. We can get another reading next week, and, all of a sudden GDP's back into the positive. So wouldn't pay too much attention to that, but that is not helping with the selling pressure. Now, I know the selling pressure has been pretty intense, and if you're new to investing, it definitely sucks, but you need to keep in mind that market corrections happen, all right? So you can see here, market corrections happen almost every year. Since the early 1980s, there have been a greater than 5% drawback in the S&P 500 index in every year but two. Okay, so keep that in mind, all right? And we're just a little bit over that 5% drawback now on the S&P 500. This is another thing I found as well, stock market corrections, which are declines of at least 10% from a peak, occur relatively frequently, on average every 1.2 years. All right, this is going back from the 1980s. And then actually it says here, since 1900s, corrections have occurred about once a year. So keep that in mind. I know it sucks when you're investing, and especially if you had just started and your averages aren't that good and you're seeing a lot of red in your portfolio. Keep in mind that these corrections are normal. Now, with that said, I want to give you my opinion of what I could see happening, okay? So here is a look at the S&P 500 as we were just talking about, and you can see from the peak down to where it bottomed today was down almost 7%, all right? And you can tell that this is a pretty substantial move for the market. I mean, it doesn't typically have moves this big. Now, one thing I want you to take a look at is how often we bounce off of this 200 moving average when we're looking at the daily time frame. We hardly ever even get to it, all right? But when we do, we typically see a bounce. Now, keep in mind, the times that we break through it and we cannot stay above it, this is typically when we see a recession, all right? Now, I want to mention this because if you're trading, right, this is the key indicator that you want to take a look at, is staying above this 200 moving average, all right? So, in my opinion, what I could see happening is us bouncing off of this 200 moving average. It might have started today, and I could see us having a pretty decent relief rally, okay, back up to this support line right around here, all right, about 595. And in my opinion, I think this would be a really good spot to look to see if we get rejected, all right, because if we do and we put in a higher low, then I could see the market continuing to sell off, all right, or possibly trading sideways. Now, in the event that we break this 200 moving average and we cannot get back above it, then I would be a little bit more worried, and fears of a recession could be on the brink, all right? And if you're new to investing, just as a reminder, the SPY or the S&P 500 is an ETF with the top 500 companies in the world, all right? So with that being said, I also want to take a look at the QQQ, which is the Nasdaq, all right? So this is going to be your top tech stocks like Google, Amazon, Meta, Tesla. All the big magnificent 7 stocks that are, tech giants are within the QQQ. And The same picture is being painted here as well. You can see that we just recently bounced off of that 200 moving average, and previously we respect this line, okay, almost all the time. And the only time when we actually break it, right, you can see that things get pretty ugly. And this is exactly what I want you to keep your eyes on, all right, is breaking this 200 moving average and then coming back up to retest it and then getting rejected, right? And then we come back up again, and it's like a relief rally. And then we get rejected again and then sell off pretty sharply. So again, in my opinion, same thing for the QQQs and the S&P 500. I could see us coming back up here, like having another, relief rally, coming back up here. And this will be a big level, in my opinion, where you want to see if we get rejected. All right, so if we come back up here and we get rejected and start selling back off, you could see us come down lower and break this moving average and continue lower. All right, and then back to what I was saying before, you can see that the Nasdaq reaching this level is down almost 10%. All right, again, pretty substantial move. I would keep an eye on us having a relief rally back up to this level, all right? But what I don't want you to do is think that the market's back and we're going to all-time highs. I really want you to focus on those levels because, again, if we get rejected and make a lower high, all right, we could see more selling pressure and things could get ugly. So just be prepared for that and don't get too greedy in this market. I feel like it's going to be pretty choppy for most of 2025, in my opinion. That's all I have for you guys in this one. Let me know what you think in the comments. Are we about to see a rebound, or is the selling pressure going to continue? And or do you think that we're headed for a recession? I'll see you in the next one.